What is going on, traders? So this is a video on how to take trades from economic data. I get this asked a lot. Sometimes the moves can be very impulsive when it comes from trying to take trades from news events, right? Especially important news events. But I just want to help you identify when there's a right opportunity to take a trade so that you could just start getting more comfortable with it. Because like watching a video is going to help you get an understanding, right, on how to take advantage of it. But it's still about trading it live and then getting consistent with it and doing it every single day, then eventually you're going to get used to the speed of trading during news events. The problem is a lot of us started trading just on technicals and avoiding news. And that's the reason why you're not used to taking trades when there's actual volatility at that moment you're trying to execute on a trade. Normally, you're entering when the markets and the price action is moving very slow. And then sometimes you're entering before a news event and you might get lucky, and then you're catching the volume going up. And then most times you're probably in there and you're not paying attention to the news and you're ending up losing the trade because you're not paying attention to what's going on in the markets. All right. So like I like to use this as an example. This happened May 23rd. This was at 9:45. We have the United States PMI manufacturing and service data that came out. And as we can see, data came out higher than expected. So with this higher data print, I expect this to give dollar strength. So before data goes out, you want to have a bias. If data comes out higher than expected, is that going to give you strength for that currency you're trading, or is it going to give you weakness? First, you have to identify that first, right? So before this data came out, we had a bias. If PMI data comes out higher than expected, I will expect this to give dollar strength. If PMI data comes out lower than expected, I would expect it to give dollar weakness, right? But it's not just that alone, the data, that entering right off the bat from the data. No, it's about let the data give you the direction, and then you go to your technicals, right? And see if price action is following the direction of the data. And that's what's going to help you take advantage of very good trades, along with being in the right direction in the markets. Because sometimes if data comes out higher, like for this instance, data comes out higher than expected. And if price action is not following, right, if the dollar is not pushing higher then and breaking above structure, I don't want to take the trade. So I'm going to just leave it alone. Okay. So let's go to this example at 9:45. We had data that came out higher than expected. We can see right here, the actual came above the prior. It was expect a stronger print in the dollar. So remember 9:45. And when we're looking at the chart right here, this was around 9:45 was right here. This candle pushing up higher was 9:45. So there's no coincidence that dollar gained strength from the data when we see that PMI came out higher. So that's your bias. So the way you look for the trade is, remember what we talked about, support and resistance zones. If we start breaking above structure or below structure, that is showing you that investors, traders, whatever you want to call it, market movers, however you want to name it, it is showing you that for that currency, that asset you're trading, there's more buyers in the markets or sellers in the markets when they break a zone. So for this instance, we had higher data. And then now we had a resistance area being formed. When the data came out right here at 9:45, it broke above structure. This is confirming to me that price is following the data, that the markets is wanting to buy the dollar because the data is supporting dollar strength. This is what we look for opportunities to take our trades, okay? In this scenario, when it comes to taking trades from the data, this is going to be more of an impulsive entry. It is risky, but it is no exact science to this, right? It's just about watching price action happen over and over again and getting comfortable with taking these trades. For this example, price broke above resistance. So this shows that, this is actually following the data. So once it started breaking above the structure, this is where I felt you feel comfortable. Well, I actually took buys on this as well. This is how I'm gonna mark off the trade entry if this continues higher because we broke above structure. So now I just want price to just continue to stay above this resistance area in order for me to take advantage of the trade because it's following the data. Obviously, I know we see this candle happen right here. This was because of the housing data that came out afterwards, which came out lower than expected. So that housing data made the dollar drop. But you can see the wicks. This goes back to what we was talking about support and resistance. We want to focus on candle bodies. Wicks is it happens. Like this type of stuff happens when there's like extreme data. But normally wicks don't happen like this just normally, you know. But we can see how when we're entering from the data, we want our technicals to align with the direction of the markets, like fundamentals, okay? And then there's sometimes if it is not an impulsive entry, right? What I would look for is, yes, you could look for, just going by an example, we just looking at technicals again. So say an example that data came out lower than expected, but it wasn't a surprise, right? Say if it wasn't a surprise, it's just a lower print. This PMI print came out lower, but it wasn't a surprise, right? So that means if it's not a surprise, then that just means that it's not going to be a lot of volume in the markets. It's not going to be very volatile. The moves is probably not going to be like this, moving up 60 pips in one 5-minute candle. But sometimes if we have data that is not a surprise, we could wait for candle body closures, right? Like something like this where we started breaking below support, and then you could try to take advantage of the sells, okay? Because sometimes this can happen as well. And it all depends on hindsight, right? Just understand when you're trying to trade this way, it is no exact science to it. You just want price action to go in the direction of your bias when data comes out. Rather it's candle closures, rather it's entering impulsively, is completely up to you. When it comes to the time frame you want to enter, I normally like looking at anything below the 10-minute to the 5-minute to the 3-minute to the 2-minute or the 1 when I'm looking for entries, right? So typically what I would want to see before I enter a trade, right, is I like to see breaks of structure, right? Like an example is like this right over here. I love to see break of structure when it's going in my favor. And sometimes I like to see order blocks or consolidation happen before the data comes out, because if I get this consolidation, it is showing me that price wants to continue higher. All I have to do is just wait for it to break structure. So that's what I like to do when I'm entering data. And there's going to be more videos on this because it is hard, because when we're looking at it from after the fact, I would tell you here, after the fact, it is easy to say buy here, sell here. It is important to do this live so that you could gain more experience. And that's where you're going to start getting better and better. But at least you could get the foundation on what to look for if you're entering a trade when data comes out. It's either going to be impulsive or maybe it can be slow. But first you have to have a bias. Like an example, this data from PMI showed me that dollar should be stronger from this. So now I'm just looking for technicals to break above structure. And it could just be something like this. An example, just say that we get consolidation before data happens, right? And I consider this an order block. We're just sitting, we're not breaking resistance and we're not breaking support. But when the data comes out, and say if it's a surprise, I have to anticipate that the volume might be very fast. So I'm anticipating that if it's a surprise in the markets. So what I want to see is if price just starts breaking out higher and breaking above resistance, that's when I want to enter my trade, is right here as it starts pushing up higher, anticipating to push higher. And my stop loss, I always like to place my stop loss below structure, because if it breaks support, that's showing me that I am in the wrong direction of this pair. It's showing me that I'm in the wrong direction, okay? So that's where I like to, and even if it sells, I would do the opposite, right? Say if the data comes out lower than expected, I would just put my stop loss literally above resistance, because I'm expecting this to continue to sell off. So when price breaks lower, I'm entering as we start breaking below support, and my stop is going to be above an area where I feel that the trade is going to be invalid. Okay, so that's how I like to place the trade. But when it comes to entries, if this is not a surprise, I could wait for a candle closure in the 5 minute, the 10 minute, maybe even the 30 minute. You could wait for candle closures if the data is not a surprise and is not volatile, right? Because it all depends on the moment, right? Like an example, if, just looking at, because we're live right now too, still market open, we broke below this support. You could wait for a candle closure like this right here, breaking below a support area, and this could be your entry to enter the trade, and then you could be looking for sells as data is confirming that dollar should be weaker, and this could be your type of trade that you could be looking for. Okay, so that's how I like to play it. That's how I like to look for entries. And again, I'll do more videos on this because it takes time, it takes experience to do it. But these are the best ways to have a direction in the markets and to be in the right side of the markets.